Yeah, I'm here. Sorry, I just had some uh technical problems, but we'll get started right away. Uh, okay, let me just go back to the first slide. Yep. Okay, yeah, so hi everyone, thanks for taking time out for December's meeting. I won't spend too much time talking because we have two presentations today. And then for the macros, also really quick, mostly things that are a continuation of what we've sort of seen before. Yeah, from the three markets that we look at for the States, inflation and then higher interest rates are still weighing on domestic demand. And then, but for expectations of next year's, especially early next year, it's most likely going to be a mild recession. And then for China, there's recently been a loosening of COVID-19 restrictions. And of course, this has sort of started the true scale of outbreaks. Yeah, but then it might take some time. It doesn't mean that once we lift the restrictions now, it's going to be a very accelerated process of just opening up. They're unlike the rest of the world. I think China, like consumer confidence businesses in China, they need that kind of adjustment period to get used to the virus, just as the rest of the world kind of has. Yeah, and then Latin America is still dependent on Europe, dependent on the States, and then also, same thing from the central banks, and then also some political instability. So that could also dampen some of at least the recent short-term outlook within the next few months or so. Yeah, but I won't talk too long. And then this is also as a continuation of before. I'll just go through that really quickly. Yeah, and then as some of you guys might have already been approached to this either you've already notified me or we've already started coordinating mentors or trying to fix a time for you to get your initiation memo down. So yeah, for those of you who haven't decided yet or haven't really contacted us yet, you can also let us know as soon as possible. Yep, and then for this month, also not much movement because of our really high cash position. And then yeah, so I think this will be a good segue into today. I think today we'll just try to look at moving forward, especially for the next month or so. We should really be looking into finding ways to deploy more cash. So either increasing the sizing of our current holdings or hopefully getting some fresh new ideas in, and then we can also get more people to start coverage on either different markets or different names, and then hopefully we'll have more discussions from there. But yeah, I think Jingxiang, could you guys get started on the presentation of what you guys have now for Baba? I'll stop sharing.
Sure. Okay. You want to see my screen?
Yep.
Okay. So Olivia and I are starting like a short research on Baba to see whether like it is a very value stock to buy now, because the fact is like the price of Baba has been down quite badly, yeah. And it's actually lower than its IPO price. So like it seems like a very value buy, considering like it's a very strong cash cow. So we want to like take a relook at like how its e-commerce like how its sectors are holding up, basically. Yeah. So I start off with a business overview with Baba. Baba is a Chinese technology conglomerate with business dealings in e-commerce, logistics, cloud computing, and digital media and entertainment. A breakdown of its revenue is as follows. So you can see that e-commerce, especially China commerce, still takes up a significant amount of its revenue composition. And the next one to come is international commerce, and the third one is cloud computing. These three are also like identified as the main drivers for Baba's future growth. Yeah. So to break it down, China commerce side, you have the products like Taobao, Tmall, that are like very commonplace in China. International commerce, they have products like Lazada, AliExpress, and some Trendyol, which is in Turkey, Daraz in Southeast Asia, South Asia. Sorry. And in the digital media and entertainment segment, they have companies like Alibaba Picture Group Limited, which produces like movies. And in innovation initiatives, they do things like conduct research on AI and semiconductors under the Tamo Academy. Yeah. So yeah, but our analysis will mainly focus on the main three segments, mainly China commerce, international commerce, and cloud computing. Yeah. So now we look at the business model for their online retail. I'll hand this over to Olivia now. Yeah.
Yeah. Hello, this is Olivia, and in this part, I'm going to talk about it. Like the main revenue was generated from the e-commerce for Alibaba, and it's almost occupied 76%. And like the Alibaba's revenue is mainly like the revenue from e-commerce was mainly divided into the Chinese market and the international market. And Chinese market, the percentage almost occupied the 69%. While for the global e-commerce, actually is quite of stable, keep in around 6% of revenue. But like the revenue growth of Trendyol and AliExpress is kind of slow because like due to the negative impact by the depreciation of Turkish lira against RMB on Trendyol, and also like the weakening order growth of AliExpress that was affected by the change in the European Union's like value-added tax rules, as well as supply chain and logistic disruptions due to the Russian-Ukraine conflict. So the performance of the international market is quite not that good recently. So we're going to talk about more Chinese market. While Alibaba also has a very wide layout, which involved into like the B2B market, B2C market, and C2C market. While sorry, for the Chinese e-commerce, the revenue includes customer management and direct sales, which customer management including the advertising revenue, and also the mainly revenue was generated from the commissions on transactions. While for like the example for the Tmall, the commissions percentage typically range from 0.3% to 5%. Also, it's depending on the product category. Yeah. So for the direct sales and others, this is kind of another part of the revenue. Like it's a kind of offline business, and includes Tmall supermarket and Fresh Hippo. It's kind of to survive the. It's kind of to support or offer the fresh food or the vegetables offline. So yeah, it's has some gradually increase revenue, which we can see in this chart, the gray bar chart. Yeah. So the next part, like if we see the GMV and we comparison the GMV between these three main e-commerce company in China, and like there is a gradually increase for Alibaba GMV, and in 2021, Ali actually reached almost 7.5 trillion yuan, and which more than the Pinduoduo and JD combined. While the rate of growth is slowing, but I think it is still ahead. And I think the main influencer of the Alice GMV is the number of annual active consumers. So in 2022, Ali actually has already served approximately 1.3 billion annual active, including 1 billion from China and 305 million customer out of China. Well, there is a slower growth rate of the GMV in Ali. Well, I think there has a related to the number of internet users. Like the number of Ali's annual active users reached almost 1 billion, which covered the majority of Chinese internet users. And well, based on the total number of the Chinese population, so it's the network user actually has already reached the toppest penetration. So and it's hard to get more increase on the network users. So this indirectly leading to the slow growth of the GMV, I think. Sorry. Well, for the next part, it's the comparison between the comparison of the revenue. Like for the revenue in these three companies, well, JD was in the first position, but if we saw the gross profit, like the Alibaba, it still got the domination position. It's quite a big margin, but the JD has some less margin, I think. Yeah. And the next the net income actually showed here like there is a kind of main reason we find why the net income decreased a lot in last year because of the sudden loss in the interest and investment income compared to profit in last year. And also, like, there is lots of expenses spent on the user growth and the support to merchants in Taobao deals and Taocaicai. This is to new platform, maybe a new platform for Ali to to business. Yeah. And the next part is the free cash flow. We also saw, like, in last 2 years, there we can see a increase in here and increase in here. So for the cash flow conditions, Alibaba was still in a quite of sufficient and enough liquidity. Yeah. So next part is the industry trend in Chinese market. Like, now the live streaming e-commerce is a kind of big market, like by comparing its penetration and the market scale in the whole commerce industry. So for this, in terms of the live streaming e-commerce, Taobao's performance actually didn't reach the expectation of Ali. And also there are two very strong competitors like Douyin and Kuaishou. Well, however, the growth rate of the streaming actually has reduced year on year, which can be saw in last chart. Yes, this one. The growth rate has decreased actually. So although Taobao may lose some users because of the live streaming part now, but if we in the long term running, online shopping will still online shopping in the form of graphics, I think will still continue to dominate the e-commerce market. So it won't be a kind of a long-term effect for live streaming part. Yeah, this is my part. And next part is cloud.
All right. So cloud computing has become like the supposedly next big thing in like Alibaba's like growth because of how lucrative and like new the industry is. So to give a brief overview of what cloud computing is, right? So cloud computing companies now actually have three main service models. The first one is called SaaS, where like software as a service, where companies provide applications that are hosted on websites, basically cloud computing infrastructures, to users, which are mainly companies. So then they charge like a monthly subscription fee for the company to use these services. Yeah, so this is actually the most commonly used service within the cloud market, especially in the US. And it has a very high gross margin of around 50 to 70%. So the second kind of cloud computing service is called IaaS, infrastructure as a service, where they provide like cloud-based and pay-as-you-go services like storage, networking, and virtualization for companies. So companies will be able to reduce their like need on like purchasing hardware on their own, because you can get these cloud companies to host them for you. However, because like these IaaS services are quite hardware based, basically the data centers, the gross margins are a bit lower than SaaS services. Then the third kind of cloud computing model is called PaaS, which is platform as a service. It's a hybrid between IaaS and SaaS, where it doesn't actually create like an application or software like let's say a SaaS service like Salesforce would do. Like Salesforce creates like basically a sales management software for the companies to use. But PaaS, it doesn't really create an application, but it empowers the company or developer to create like a software. So it's like a sort of like an incubator for SaaS services. Yeah. So businesses and developers will be able to harness like their technologies that PaaS platforms have produced to create their very own business applications. The gross margin of PaaS is around 50 to 70%. Yeah. So this is an overview of the types of cloud computing platforms in China and like their respective domain that they are working in. So for Ali's cloud, it's quite special in a sense that it actually only focuses on PaaS and IaaS, and they basically they drew out the tagline that they want to become a SaaS accelerator, meaning that they will not touch or provide any kind of SaaS service to their customers. Yeah. So what they want to do is to provide hardware and solutions to help like SaaS companies in China to realize their enterprise products. Yeah. So through like their platform called SaaS Accelerator, what these kind of SaaS companies can do is like there will be modules within the web page. Then they can drag and drop these modules to quickly create applications. Yeah. Examples are like their robotic process automation. They will help like have automated modules to like deal with things like financial reports, expense claims that are actually rather manual. Yeah. So the reason why Ali has decided to do this is because that they think that the SaaS market in China is very fragmented, and most there's no like a like a big company like Salesforce, in like how Salesforce is so dominant in the US compared to like in China there isn't such a company yet. So most independent software vendors, right, have a very small market share. And at the end of the day, because SaaS companies, when they approach like smaller companies, they kind of have to tune their software according to the company's needs. So the problem with such is that at the initial stage of the like their setting up, they will face a problem if they have very low gross margin, because they have to tweak a lot of things to feed them, and it's very hard for them to scale. So for these SaaS enterprises, if they partner with Ali Cloud, it will mean that they can use these PaaS platforms and modules to quickly deploy their SaaS solutions and increase their gross margins. Yeah. So this is like their selling point for their for Ali Cloud. So another thing that Ali Cloud does is IaaS, and they are like one of the leaders and stuff. They have a very strong first mover advantage in the market. So okay. So the entire China public cloud computing market is actually in its quite nascent stage compared to the rest of the world, and it will achieve like a very high growth in the future, basically. Yeah. And currently Alibaba Cloud, because they started very early, they are the current market leader. And they currently hold like 37% of the market share. And this is compared to 31.1% in 2020 and 28.9% in 2018. So we are seeing a lot of like capital and more investment in this cloud computing field. And with the trend and like the material effect coming into play, the market will likely consolidate like with the market leaders, basically. Yeah. So analysis, like looking at the Alibaba Cloud's just Alibaba Cloud's revenue, you can see that it has actually achieved very, very high growth in the past like 4-5 years, like reaching 84%, 60%. It has slowed down in 23 this year to only 23% though. So but the past few years of very high growth means that like their first mover advantage in setting up their cloud computing segment very early has allowed them to like have a lot of industry leading technology in the cloud field that could boost their service to like to be customers. And yeah, so with this technology advantage as well as a growing market, right? We think that there will be exponential growth for Alibaba Cloud in the next few years. So the growth here will probably increase a lot, and this will be a very, very good driver for growth for Alibaba. So yeah, by just looking at the business models and like the current trend of how these two segments are adding up, right? To conclude, maybe we'll say like they are resilient in the e-commerce field and very strong in like the cloud computing field, and that's why we think that Alibaba, despite its very low price now, should be a buy. But we haven't done moving forward. We are gonna do like we probably do a DCF evaluation and a sum of parts valuation to see like how cheap Alibaba stock actually is. Yeah, so this is this is what we have done now. So yeah, if you have any questions or like any viewpoints or anything, you please bring up. Yeah.
Okay, thank you both. I think just to like clarify some stuff. So your thesis is going to be more centered on the cloud business's growth. Is that correct?
Yeah, most probably.
Okay.
Because like
And
the
then-
e-commerce side, the growth is quite limited.
And it's mostly due to stuff like the saturation of internet users and
Competition
high
as well.
profit margins. Yeah. Okay.
Yeah.
Okay. Yeah. Okay. Does anyone have any questions before maybe the PMs? Zhengqing? Or anyone from Spring who briefly looked at Baba before?
I don't really have any questions.
Okay.
Hey, Rebecca. No, I don't have any question at the moment.
Okay. Okay, for Olivia and Jingxiang, I think, yeah, this is great work. I think moving ahead, I think we need to tackle the main problem from the opposing side, which is, I think, why the stock went down in the first place. So I think we need to do a little bit of an analysis on government regulation, on the antitrust suit, on basically, I guess, also like what are the tailwinds? So for the cloud business, if China has any policies moving it forward for I know recently I think was it Tencent? Yeah, Tencent had this huge conference about its cloud and then I think it's trying to set up a lot of strategic like partnerships with like Yangtze, with like the SOEs, with like within the industry. I think this is interesting, especially for the cloud business. So maybe this could be something that you guys could look into for the cloud business, other than their their first mover advantage, other than their technological lead, and what are other things that are contextualized to China, and what kind of business environment especially for the 数字经济 with like moving everything onto the cloud and what the government might want to play in this. I think that's something that you guys can explore. Yeah, and then for the DCF for the SOTP, I think if you guys want to focus more on the cloud business than the other things, I think you can try and give more conservative or maybe just like you don't have to make super risky assumptions for the others. Yeah, and then also like for how much the memo is going to cover. Also like I think more of more length of it should be covering try to do a bit of both sides. So like I said before, like why like bearish investors might not look favorably upon their cloud business, why they might, and then you guys can do more of like a justification of what your stand is, and sort of address like one by one what are the bear concerns, and then present your case. I think that would be that would help you through the process, and then also help to make your case stronger. What do you guys think?
Yeah, of course. Like the risk part,
Okay.
actually, we were planning to do it, but we just haven't got to it yet.
Yeah, no problem. Yeah,
So,
yeah.
yeah.
No, it's
Uh,
okay. Yeah, but
yeah,
it's
but
just moving forward. Okay,
yeah, sure.
Yeah.
sure. Okay. Yeah, but it's great work. I'm really happy to see this, and yeah, just keep up the good work. And I think if you need any input or if you need any help, I think you can approach any one of us, or maybe if you need like a professional, like a mentor, you can also let us know, and we'd be really happy to arrange that for you.
Thank you.
Yeah, but yeah, good job. Keep me updated on the process. Yeah, so thank you. I think we can move on to Spring with the EV sector research. I think it was Javier and sorry, who was it?
Yeah, it's me and Javid, yes.
Oh, Eugene. Yeah, okay.
Yeah,
Go ahead.
okay, thank you. Okay, hi everyone. So Javid and I are going to be presenting on the EV industry in China for Team Spring. Yeah, so this is an overview of what we'll be talking about. So I think looking at EVs and ICE's trends, competitive landscape, recent developments, and yeah, some risk in this sector or this industry. Yeah, so I think going right to the start, I think what really are EVs? Actually, EVs have been here for a long time, but it wasn't very economical to produce them on a large scale until recently. So they were actually founded in like the 1800s and by certain inventors, and the small scale EVs were actually invented. And in the 1900s, it became a very big thing in the US markets because of certain issues such as difficulty in driving your manual cars and high gasoline prices. And after that, it faced extinction because of more exploration in oil fields and also mass production of your ICE vehicles or your internal combustion engine vehicles. And then moving to the 1960s, it became they gained renewed interest again because of US Congress passing endorsing EVs as a way of actually reducing our air production and the high oil prices in the 1960s. And in the year 2000s, actually certain popular or notable models such as the Toyota Prius and Tesla became into the market, and that's what started the trend of the EVs. And moving on to the 2010s, that there was rising in charging infrastructure and also some of the maintenance facilities. And in 2021, actually, there were more than 10 million EVs on the roads compared to the negligible number in 2010. And yeah, EV as part of global car sales reached nearly 10%, with China taking a big part of it. So now we look at some of the different types of EVs. So mainly we classify them into four different types. Your fuel cell EVs, which actually uses a certain type of chemical fuel, such as hydrogen, to produce that electricity. And next will be your battery EV. So this is solely run on battery and charged by plugging onto your electricity grid. And next will be your plug-in hybrid EV. So it has both your engine and also your electric motors. So it first runs on battery first, then there's extended range from your gasoline. So this gasoline is more of like a protection for your range, extension of the range. And lastly, will be your hybrid EVs, which has both your engine and electric, but in this case, you only refuel your fuel tank. And the fuel supplies the energy to run, while the batteries run on electric motor. And these batteries will last about 100k miles. Yeah, so moving on to the other side of the vehicle market will be your ICEs, your internal combustion engines. So basically, it's a normal engine that runs on a fuel. And yeah, right now there's two different kinds of ICE, your spark ignition, which is literally what it means. Yeah, there's a spark that actually ignites the gasoline, and your compression diesel engine, which compresses the diesel such to the point whereby it ignites. And different types of gasoline are also available, or different types of fuel rather, and it could include renewable alternative fuels, like your biodiesel, ethanol that can possibly come from your crops, like corn. Yes, and yeah, for China, there's different gasoline standards, and they have improved over the years from the 1999 to actually 2013, with the sulfur content decreasing. So this is just on the other side of your vehicle market. Next, we're looking at the environmental impact of your EVs. So producing EVs actually lead to more significant production, actually 30 to 40% more compared to actually your gasoline or petrol cars, mainly because of your battery production, because of your mining practices, the need to transport these metals. Yeah, they're very energy intensive, and this causes more emissions. However, the positive side only comes from your EVs having emissions, lower total emissions per mile compared to your ICEs. So over time, your environmental costs are lower if you use an EV. So according to our research, typical break-even point for carbon emissions was about 15 to 20,000 miles. And depending on the cars or depending on the country, it has average miles of 10 to 15,000 miles, average mileage of 10 to 15,000 miles per year. So here we have actually certain scenarios. So actually, ultimately, the environmental impact is based on how renewable the electricity from your grid, how renewable that electricity is generated. So if it's 100% hydroelectric, this is the amount of break-even miles. Whereas if something is completely coal-fired, which will actually have more environmental damage or higher environmental impact, you actually have a lot more miles for it in order for it to break even. Looking at the consumer cost savings, electric cars are right now more expensive to pay upfront, but because of improvements in technology and also like your because many of improvement in technology, this price actually decreasing, and your initial price parity is likely to be achieved within the next 5 to 10 years. And right now in China, there's EV tax credits to help save on the purchase, but they have been decreasing across the years and won't be here forever. On the right side, the charging and maintenance cost of EVs are actually cheaper compared to your ICEs. And with this graph, you can actually see from right now to actually 2030 how the different types of EVs will actually become will actually have a lower cost compared to your traditional conventional cars. Looking at the producer side of things, looking at the cost side, I think in 2021 and 2022, right, there have been high raw material prices like your lithium for your EV batteries, and also even for your ICs when steel is needed. And companies are forced to raise the prices of these vehicles. So actually, the companies that are really able to do so are the market leaders, or those who have resilient supply chain, like your Tesla and BYD. BYD producing their own batteries, and Tesla having good relationship with its battery producer. And yeah, whereas the smaller producers, or those that are producing cars from the lower to low end of the market, will actually have to absorb, or rather take on smaller margins, or possibly even stop production of some of their models. And EVs will be cheaper to produce than conventional fossil fuel power vehicles by 2027, before even any government subsidies, because of the lower battery costs. And even that is just like a base case. I think UBS also even projected that this can be reached by 2024 with the lower battery prices over the years. And producers are investing heavily in R&D, so not just within China in itself, but also like other companies like your Volkswagen or BMW are actually entering into JVs with companies in China because of how ahead China are in terms of their tech, and also their talent pool they have in China because of how early they have really invested in this EV technology, right, even from the 1990s. And looking at some points of resistance from the consumer side, I think cost is really the biggest deterrent now, the upfront cost. And range anxiety is actually becoming less of an issue with the ranges actually increasing over the years significantly up to about 349 km on average. Charging infrastructure, I think, remains to be the issue that China is actually actively addressing. Time to charge versus refilling gasoline at a normal station, it's significantly longer, almost up to an hour. And some of these companies are actually addressing this with battery swapping technology like NIO. However, this is still relatively new and company specific. So your battery swapping technology is only able to be fitted into similar cars or cars with the similar battery technology, and it cannot be shared among different competitors. So in this case, it would not be, it will be something that consumers will be wary of, and it won't help to speed up this charging time. And for the industry as a whole, there are certain tailwinds that actually is driving the industry, mainly from the government's policy. China intends to become carbon neutral by 2060, and because of it trying to be a leader in the EV industry, and also its focus on energy independence, like reducing its dependence on foreign oil and gas imports. And yeah, through this, it has grant subsidies to EV buyers. However, this has been reduced gradually over the years because of how the market has really actually expanded and picked up. And recently, I think they extended the 5% vehicle purchase tax exemption for EVs till end of 2023 to continue to provide support for the industry and expand this market. And just now I mentioned about the charging network and maintenance facilities. So I think right now in the tier 1 cities, it's actually getting saturated, and the high growth potential comes from the expansion into the rural areas. And that is the tier 2 to 4 cities. And the government is working with some of these, I think 26 different car manufacturers to actually expand their product offerings and also charging facilities in some of the rural areas. And so here are some of the goals and some of the stats that really show how China there's massive growth in the China EV industry. And looking at the trends in the EV market in China, I think got 3 main points that I'll be talking about. I think first will be the improvements in EV technology. Mainly this will be improvements in EV technology. The average EV range is rising steadily with many different products, or rather different models for sale in China. So with the average range being 420 km this year, efficiency is also increasing. So efficiency is really measured on your distance that you can travel based on the amount of charge, or rather the fuel in this case that you have. Efficiency has been increasing 2% every year since 2018. And I think overall, this expansion is moving beyond the mega cities into the smaller cities as well. And yeah, China is just, the Chinese government is actually expanding this.
Thanks, Eugene. Yeah, so now for my part, it will be more on the investment side of things. So I'll be giving like a high level overview of like the companies in this space. So like the coverage universe, as well as talk about some valuation related stuff and some risk if we invest in this space. Okay, so this is a market segmentation map that I kind of made based on price versus the range. So the range, you can sort of take it as a proxy for like the tech specs of their vehicles, right? So if you look at the top right hand corner, that will be like the more premium market which Tesla is serving. So Tesla's vehicles are the most advanced, they are the most most powerful, but with all these specs you also need to pay for it, so the vehicles are the most expensive. And on the bottom right, these are the more value kind of players, right? So their cars are pretty good, but they're also quite cheap. So yeah, I prefer the companies in this space. Yeah, then for NIO, it's kind of mid-range, but then it's also a bit more on the pricey side. Li Auto's cars are not very good, but it's not very cheap either. Yeah, so that's kind of how these companies have positioned themselves. Okay, yeah, so this is a comparison of the different models. This is the premium model, their most premium models comparison. I wouldn't really dive into the details, but I think the thing to take away from this is that Tesla has really positioned themselves to target the premium market. You can see that the prices of their vehicles are like 2 times the price of like the next most expensive brand, which is NIO. Okay, but the specs of their vehicles are also like way more advanced. And if we look at the more affordable models, BYD is dominating this market with their cheapest model at 14.5K only, which is like much cheaper compared to the other brands. Okay, but for this vehicle, it's really nothing special. It's really entry level, and it's just a vehicle for someone who wants to, who needs like a car to get around. Yeah, it's nothing fancy. Yeah, so this is the market share, like a snapshot of the market share in like the past 3 years. So in 2Q22, BYD actually outsold Tesla, yeah, by quite a lot. Yeah, so currently they're the fastest growing brand in terms of NEV units sold. For 3Q is the same thing as well. BYD was the top selling EV producer, and it is globally, not just in China. Yeah, so if we look at some valuation related metrics, I think that BYD is worth paying attention to. They're trading at quite a fair multiple. I think it will be clearer in like the next few slides. Okay, if we look at like the 1 year historical returns, you see that the entire industry actually underperformed like the broader market, and this is due to things like poor earnings, fear of delisting, etc. Okay. Yeah, and if you look at their forward EV sales, you see that they have kind of converged towards the mean already. So if we do invest in this space, it will not really be a mean reversion kind of play. So with these valuation multiples stabilizing, my opinion is that it will be sensible to take positions in the high growth companies, because if the EV sales multiples don't really move much or don't diverge much from here, then the fastest growth company will translate into like the highest growth EV, which will translate into highest growth and equity value, which is share price appreciation, right? So that is one potential approach we can take, or we can also go in the direction of betting on the company that might see a multiple re-rating. But I think for that kind of play, it's a bit harder to spot. Yeah, so in that chart over here, in that table there, you can kind of see like which companies are currently growing at the fastest rate. Yeah. Okay, so now I'll be talking about some recent developments to take note of. Yeah, so according to Bain, they are saying that consolidation in this EV industry is quite inevitable. Like industry consolidations are usually done to cut down costs and like increase operational efficiency. And for this EV industry, they are highly capital intensive and tech heavy. So it does make sense for this industry to eventually consolidate. Even the Chinese government has come out to say that there are currently too many EV companies in China. So we cannot rule out like the potential that, or the possibility that they might perform some regulatory action, which I don't think will be surprising given their previous moves in like the private education sector and like the tech crackdown issue. Okay, so in this case, I think if we were to invest in this space, I think we can pay attention to like the company balance sheets. So when this consolidation phase does kick off, does the company that we invest in have the financial flexibility to pursue this M&A driven growth? Or because if they don't, then like some other companies might consolidate and then they'll just take over like the top few players. And this has happened in other industries before, like for example, like telecom sector. Yeah, so and the news of acquisition could also serve as upside catalyst. So I think this is something that we can pay attention to. Next, the battery glut could also lead to decreasing prices. So for this industry, they historically faced a shortage of EV battery metals, such as lithium, nickel, and cobalt, because they weren't able to like produce enough mines to keep up with the soaring EV demand. And batteries are the largest cost drivers of EVs, which take up about 45% of the total manufacturing cost. So any like fluctuations in the raw material price will greatly like drive the manufacturing cost of these vehicles as a whole. And yeah, research has shown that the pricey batteries could push up the price of EVs by 1.5K to 3K. And earlier this year, some of the companies have already raised their prices. But recently, Goldman Sachs actually released like a sort of a contrarian piece of research that said that battery metal prices will actually crash over the next 2 years. Basically, they seem to have collected like the numbers of the number of mines being open, and they are saying that businesses are already building up too many of such mines, which will lead to an oversupply of the metals by 2023. Okay, so if this is true, and as costs come down, I think there are two likely scenarios. So for the premium EV producers like Tesla, who might not lower the prices, their margins might widen more than expected. But for the low to mid-tier producers, they'll most likely pass on their battery cost savings to to consumers, because I think those are the more like long tail kind of players, and their sales volume might increase more than expected. Yeah. So some of the key risks for investing in this industry is that we might face slower than expected adoption because of the metal prices. So currently the market is still pricing in like higher metal prices because the future prices are higher than the current prices, which is called contango. So this means that yeah, the market is still expecting like higher commodity prices, right? So which is like against the contrarian research that I just talked about. Yeah, so if this is true, means that batteries will continue to get more expensive to produce, which might not be good for adoption as a whole. Yeah, but this is something to look out for. And yeah, so if we do invest in this sector, I would recommend going for companies that have like cost saving strategies, such as like vertical integration, or they have like cheaper batteries or something. And I'm referring to BYD, right? Because they have like blade batteries that are like 40% cheaper to produce than the traditional LFP batteries. So I think in this stage of growth for the industry, price competition is quite crucial. So we need to like take note of that. And yeah, another thing to note is that a lot of the industry players are focused on the more premium products, like they are trying to increase the range and like increase the max speed and whatnot. But our view is that the players which can transition towards a more long tail model can kind of steal market share and emerge as the winner in this EV race, especially with the emergence of the EV infrastructure in like the lower tier cities. The premium producers probably cannot afford to kind of target those markets. So yeah, we might want to look at the more long tail players like BYD. Yeah. So I think that would be the end of our presentation. Thank you for your kind attention.
All right, thank you both so much. That was great. Yeah, I think I've honestly learned quite a lot. Okay, does anyone have any questions for the two of them? I know
I
Shinya
got
was...
one question. Yeah.
Oh yeah, go ahead.
So I'm not sure if I missed it, but how are the margins between the different players? Maybe on like gross margin, because I think some of them are unprofitable. Because I was thinking, say, BYD, for example, if you compare it to the smartphone industry, it seems like Tesla is an Apple where they get most of the profits because they sell a premium product. Whereas BYD seems more like a Samsung where they go for volume instead of trying to sell at a premium price. So I was just wondering how the margins are like. And how do you think that will affect like the industry in general?
I think you're right on like the Apple Samsung analogy. Like BYD intentionally prices their vehicles at a lower price because they want to pursue that long tail model. Yeah. Okay, I'm not like that sure about all the players, but for these like top two, I think that would be the case. In terms of how it will affect the industry, I mean it's more of like their own car positioning. If they are able to sell at a cheaper price, but they can compensate in terms of volume, then they'll make it a pretty good business also. And that is what BYD is currently doing. Yeah, but I mean, Tesla doesn't lack that much in terms of like units sold as well. So, that might make it a pretty good business as well. But in terms of like investing and looking at the actual stock itself, if you look at the valuations, I think BYD would be the more like reasonable play compared to Tesla. Yeah, that's my view.
Mm-hmm. Okay, thanks.
Yeah.
Okay, I actually have a question. Do you mind going back to the industry consolidation slide?
Yeah, sure. One moment.
Okay. Yeah, I think this is really interesting. Do you guys have any bets on like what potentially might unfold? So uh like who might be uh the ones who are like going to try and acquire or do you guys have any predictions on that yet, or this is just something that you are prepared to expect?
Okay, I'm not sure if there's like a very set way to kind of predict this, but I think if you
Yeah.
look at their balance sheet, you can see that some of these companies have been kind of building up like their capital reserves and whatnot. Like Tesla and BYD, their cash and equivalents has grown like 30% in the past year. So I mean, I'm not sure if that's just because their business has been doing well or they're like preparing to do something with that cash. But I guess this is one of the metrics that we can pay attention to. Yeah.
Yeah, and I think kind of like Jungting said just now, like especially some of the ones who are struggling or like have smaller balance sheets, like you said, I think it'll be interesting to look at them as maybe potential targets, and then also maybe think about what strategy like any of the bigger fish might be trying to go for and who they might be looking out for. I think that could make some changes to uh the kind of landscape there is that we're seeing now, and then that could also mean some big shifts for the industry. So yeah, I think this is a really interesting road that you might explore. Like it's something that's I think quite there's a lot of space for, I mean, a little bit of imagination, but also not, completely baseless. Like you said, there's a lot of ways to kind of, yeah. Okay. Yeah. Another thing, I think more on the adoption and kind of, like what Jungsing mentioned. So kind of, what your, uh, positioning, what your branding is. Like I think maybe, do you guys have any thoughts on what you think is, sorry, I think you might have shown this on the last slide, but can I just clarify that you guys think that what kind of model that is going to be more favorable for adoption is like lower priced or like more entry level? Is that, I'm not sure if I'm understanding that
Yeah, so my
accurately.
view is that the long tail model will eventually win because I think most of the growth from now on will come from the lower tier cities, so like tier 2, 3, and 4, because they are building up their infrastructure. So I mean, just to give you some background, right? Some of the tier 2 cities have more like charging infrastructure than the entire US, which I think is quite crazy. But a lot of these markets are still like under penetrated. Yeah, so I guess in these cities they have lower disposable income, right? So they'll probably like prioritize like the lower price vehicles. They're not gonna go for like the fancy kind of vehicles that Tesla is trying to sell. Yeah, so that's why I think that the brand that can position themselves as that player that can sell like affordable vehicles to these markets will probably emerge as the winner in terms of market share at least. Yeah.
Okay, and this is in opposition to perhaps premium brands that might want to spend more money on marketing or like services after, post-purchase services or any of the more premium things. So I think it's interesting. It might be something to look at to kind of understand both sides of what, if this plays out, if more if we start moving towards the lower end of the price range, what might the other, premium brands do to combat it, or will they like also try and beat them on price, or will they try to differentiate themselves? I think that's interesting. Yeah, and then it's definitely something that we can keep monitoring. I think, like you said, it's not something that's going to be super far away. But yeah, I think just one last follow-up. Did you guys both have this idea to look into the EV industry?
Yeah, I guess so. Like we kind of came up with this idea together. Yeah.
And then so moving forward, are you guys intent on I think finding a few names, or you mentioned BYD a lot. Are you guys going
Yeah,
to
I think
go into more research?
yeah, sure. If like the club is interested, I think we can dive deeper into individual stocks.
Yeah, it's really up to you guys. If you're interested in trying to see if there's an investment opportunity, yeah, it's definitely encouraged, especially since you guys have a chance to publish it on a platform very soon. Yeah, if you're interested, then by all means.
Yeah, okay. We'll
Yeah,
discuss.
okay. Yeah, and same thing with the other teams and any other spontaneous partnerships. If you need any resources, if you need any like if you just want to discuss anything, or if you need any input from anyone, you can just let us know, and then we'll try to arrange that. Yep, okay. Okay, if there aren't any other questions, then thank you both. That was a really, really insightful presentation. I think okay, we don't have much left. I won't keep everyone here too long, especially because we have the finals coming up. But let me just jump back in. So there's actually not much else for this month. It's mostly just to kind of check up on whatever research that everyone has been doing up till now, and then to also get the club together to listen to some ideas, and then provide an input. And then coming up for next month, we remember how I think we brought up this, I think a month ago, for early December, and then we rescheduled it. So basically, the session with Daniel, it's going to be rescheduled for January, and then just like everybody to kind of, I know it might be maybe like a week or 2 weeks early, but please, once you can, once you have a pretty good idea of what your January schedules look like, please check it and then indicate a time and date that works for you in the form that we'll send out maybe either next week or in January. Yeah, and then a little bit before January. Yeah, probably around Christmas. And then another thing is, please join our Telegram group if you haven't done so, because Muli is on is on Telegram, and then we'd love to continue any discussions we have on there together, because we can't help that WeChat has some restrictions. But yeah, but please do join in. If you don't have the link up, just send me a message, and then I'll get you in. Yeah, but other than that, yeah, that's all for today. Yeah, are there any other questions, or Shinya, do you
I
have
think-
any announcements?
I think Molly has a question just now. I think he typed in the chat.
Yes, I do have a question. So am I audible clearly, right?
Yes, we can hear you.
Perfect. So so I think Javier mentioned that because of differentiation we can the BYD can get over, right? Am I correct? That's what Javier mentioned about BYD business, right? Talking about EV vehicles. By branding and promotion, that BYD business can differentiate themselves and they can do good businesses over Tesla, right?
It's not really branding and promotion, but it's more of their long tail model, which is like low margin, high volume. So they are like
Right.
I guess you can say undercutting prices, but they are they're just positioning themselves as like the affordable, like go-to kind of car.
Okay, got it. So the reason why I ask this question is that if you look at the history, right? So after the World War II, what happened is that in United States, if you look at, there are two car companies called Cadillac and Mercedes-Benz, right? So they were doing till well till 1980s, but 1980s Japanese cars came into the market, like companies like Acura, Lexus, Infiniti, right? So what happens is, so if you tend to look at the history of the auto market, right, what happens is that the fixed cost of the differentiation strategy, right? I am differentiating myself. Product development, advertising, maintaining dealer and service networks did not contract. Okay, as a result, the fixed cost for each auto went up and the overall profit margin per car dropped actually. So this what has happened in the history overall. Okay, and also if you take a look at the Chinese per capita income, it's something like $11,800, which is fair enough really. So here what I'm trying to emphasize here is that let's say if you have a BYD car now, it does not mean that you are not going to buy Tesla, because people are looking forward to buy new cars. They want to have different new cars. So yeah, my point here is to trying to say that just by differentiation itself, one cannot compete in the auto market. So that is something.
Okay, thanks for the feedback.
Okay. Right.
Mhm. Okay. Yeah.
Yeah, sure.
Okay. Just in case there are any questions that I missed. Yeah. Are there any? Okay. If not, yeah, just a reminder back to this slide. Yeah, do try to sign up for more of the Meet the Investor sessions. We've been trying to reach out to a lot of people, and Shin has honestly been trying really hard also to um invite people and create these opportunities for you guys to meet these really awesome investors. And yeah, so really like to encourage everyone, if you can make the time, please do come join us in the conversation, get to learn about their stories, get to ask them all your questions about all the stuff that you find challenging with investing, and then they can share their point of view. I've honestly been attending a lot of these sessions, and it's always been a really great atmosphere. And yeah, so for next, especially for the next one, Daniel is a mentor, and then he should be helping a lot of you guys with your research memos as well. So yeah, if you'd like to get to know more about him, just please check your schedules and then see if you can make it. Okay, if not, there's nothing else on my end. Shania, is there anything that you need to announce or?
Hi everyone. Just I want to give you a little bit, the quick comments on Daniel, and he's a very valuable member, and then the what's called he's helping us a lot, and then I invited Rebecca and I invited Daniel to speak specifically about his career path, which is a little bit unusual, and then he didn't graduate from the top schools, and then as you might know, if you are now graduating from the top 3 schools in Singapore, it might be a little bit difficult to find investment job right after you graduate. Somehow, he managed to get a job at the family office, and then he's investing in stocks at the family office. And then it was probably not the the best job he could find or maybe available in Singapore, but then he didn't want to miss this opportunity. And then what he did was he developed his investment skill sets as a young analyst, and then he was also able to develop the relationship with one of the small companies in Florida, in United States. So he was based in Singapore. He only had 1 or 2 years of experiences, but then he approached the company, and the CEO responded, and then the CEO felt that Daniel was amazing investor or analyst, right? And then he thought very highly of Daniel. So a couple of years later, Temasek, which is one of the sovereign wealth funds of Singapore, they came to Florida and then visited this company. And then CEO specifically mentioned the name of Daniel. And he said, well, this kid coming from Singapore, he has done an amazing job analyzing company. And then he understands, our company more than anyone else. And then he's not American, but he's come from Singapore. And then, the people from Temasek thought, wow, this kid might be something very different. And then he eventually, so the Temasek actually, eventually invited Daniel to come and then, speak to him. And then, so he eventually got the job. And so, he was working at the Temasek for 2 or 3 years, and he realized that, okay, I had these experiences. Now I want to move on because I know how, the large company works. And then this is not the, the right place for him. So he now is in a much better position to find a better job. This entire story is quite amazing. And then, I thought it was, the very eye-opening. And then, I thought he could be, a very interesting role model for, for many of you. And then, the many of you probably don't have the issues of finding job. But then, he's a little bit special case because, he, managed to change his life. Or maybe he didn't even change the life. That was his life, right? And then he lived his own life. And then, he enjoyed his life quite a bit. So, someone like that, I respect. And then, I thought he's a, the amazing person to for you to learn. So, if we organize this event, I hope everybody will join, and then you will learn quite a bit from Daniel. And then, one more thing, you probably remember. I hope you remember or you read the the notice from us that every one of you has to write initial report every 6 months on a new company. Right? And then you also responsible to write the quarterly reports on those companies. Right? Over the course of 2 years of your membership, you will have 4 companies. Only 4 companies. Right? That's the requirement. That's not a lot, to be honest. Right? And of course you can do more, but then when while you are at the club, we want every one of you to write at least 4 memos. The full memo, and it has a very good understanding of 4 companies. That is your companies, right? And then hopefully you can invest in those companies. And then the writing really helps you. Right? Writing helps you to understand the company, and then you gain the the ability to explain the pros and cons of the business. Right? And it also helps you to understand or analyze the company much more deeply. So I want you to write. Right? But then sometimes writing those new memo is actually very difficult. You probably don't know where you can start those writing memos. Right? So that's why I have already contacted some of you, right? And then I'm arranging especially senior members or the people who have more experience to work with the the research mentors. So these are new kind of a functions that we are creating, right? And then some of them are already professional investors, like for example Daniel or maybe Alex Cole in Singapore, or maybe the Aladdin, who is a the alumni of Z Club, or maybe someone I think for the senior members, or maybe whoever want to have whoever want to work with investment professionals, please come to me, and then I will make an arrangement for you. Okay, if you don't come to me, I'll probably pick people more randomly. But then if you need a help, or if you want to work with someone to help you to write memo, or maybe give you feedback. Sometimes they can actually help you to come up with some ideas. And then just let me know. And then for junior members, or maybe the class of 2024, I will they probably they arrange with the someone senior at the club, right? The class of 2023, right? So that you can actually work together, with your senior members, and then actually working with the junior members is actually very helpful, right? And then the teaching is learning. That's what I always think. So I think this arrangement, it makes a lot of sense. I hope.
It sounds really exciting. Yeah. So yeah. Hopefully these two.
Yeah, maybe
things
Ophia.
are-
Yes.
I already connected you with Daniel, right?
Mhm. Right.
Can you tell people like what is your plan?
So basically, I didn't tell some members here, but I'm starting a business next month in logistics. So I think reading financial reports in the logistics industry is one of the best ways to learn about many things, many aspects. So by February, I hope to publish some investment memo. I decided to focus on the logistics industry this time because it serves obviously two purposes, one for my business and another one for the investment. So Daniel is actually going to help me with anything that has to do to financial analysis and valuation, and just in general. And besides that, we also have industry experts that can help us. So Shinya actually connected me with Daniel. Currently, I have a list of about 100 companies throughout the entire industry. So trucking companies, port operators, freight forwarders, anything you can think of that has to do with logistics. And I hope that we will find something good.
Yeah, well, you have to write by February, so you should, to set the the hard deadline for you.
Mhm.
And then it definitely helps, right? And then please don't, everyone, they don't wait until June, right? You have to take action earlier, and then this is for you, right? And then if you don't write it, then you will lose your membership. Okay, so that's a rule. You don't need to write the 100-page the huge memos. It could be just one page, but then this one page you should be very, very proud of. Okay, so well, Ophia, thank you for explanation. This is just one example, right? And then you don't have to have the specific ideas, right? And then but then you can always start with something that you're familiar. Okay, the Javier, what is your plan?
Yeah, hi. So I'll be writing the memo on Stone Co. I presented previously at the meeting, but I think I'll develop a bit more on it and present it in like a memo form. Yeah, and I'll be working with Alex Ko from Temasek.
Yeah, so I'll keep arranging the people, and then the writing is not the only thing you have to do. You also have to read and then comment, right? And then your feedback is very, very important for other members, because if you don't comment, you also don't receive comments from others, right? And then the hope you write something that people enjoy reading, right? And then you don't want to write the memo that nobody reads. Okay, so when you write a memo, you have to think about the readers, right? You're writing to someone, right? And then just make sure like you have an audience, right? That someone wants to learn logistics, someone wants to learn Stone Cold, right? And then how you can explain your investment thesis in a the most simplest and then beautiful way that you can convince others to say, wow, Javier and Ophir, they sounds like experts, they know everything. I'm so impressed. I want to buy this company. Right? Writing has power. And then I hope you can learn from the process. Okay, that's it for me. Rebecca.
Yeah, all right, thanks, Shinya. Yeah. Okay, if there's nothing else, then that's it for today as well. Yeah, so yeah, happy holidays, everybody. And we'll see you next month. Thank you, everybody.
Thank you.